enjoy preferential treatment first and become the absolute mainstay of this round of bull market IPOs. Within 2 years, the 13 central enterprises that went public all made a lot of money. Moreover, central enterprises also injected assets and went public as a whole throughout the bull market. The real benefits of gold and silver have made local state-owned assets eager to try. With the banner of injecting high-quality assets, all regions have taken the end of the 11th five-year plan as the timetable for implementing securitization. For example, according to the 11th five-year plan of Shanghai, at least 30% of state-owned assets will be securitized, and if calculated based on this, there will be a total of 5.36 trillion yuan waiting to enter the capital market in various parts of the country. Even if only 10% securitization is achieved in the next 2 years, there will be at least 1.79 trillion yuan of local state-owned assets that can be injected into the A-share market, which is equivalent to about 1% of the current stock market value. If this plan is ultimately implemented, it will undoubtedly constitute the trigger for another stock market earthquake. Therefore, if it weren't for central enterprises crushing the stock market today, the stock market would have collapsed tomorrow due to the crazy actions of local state-owned enterprises. Because from the low-quality listing of central enterprises to the high-quality injection of capital by local state-owned enterprises, it appears that the quality of assets has improved, but in reality, the essence of the idea is the same. They all want to label assets as securities, achieve the intention of lifting the ban, and provide convenience for direct financing in the future. The ultimate theme is still to circle money. In the 1990s, state-owned enterprises embarked on the path of going public in order to overcome difficulties. Both the central and local governments revived state-owned enterprises by issuing stocks, and the listing of state-owned enterprises was even included in the performance system of various levels of government. To ensure the ownership of state-owned capital, it is stipulated that state-owned shares and public shares cannot be circulated in the market at the same price. Finally, when the reduction of state-owned stocks was put on the agenda, the paper could not contain the fire and triggered a stock market crash. At this point, the stock market paid a huge price for state-owned enterprise financing for the first time. Nowadays, this farce seems to be repeating itself, as the State-Owned Assets Supervision and Administration Commission has failed to rank among the top 3 in the industry for state-owned enterprises. Under the management concept of being merged, central enterprises, considering the capital chain, have recklessly increased capital and shares, or achieved refinancing through a series of asset restructuring, distorting the capital injection restructuring into a new round of money circulation movement, and the growth rate of state-owned assets since 2005 is equivalent to the birth of a giant Petrochina every year. Previously, relevant parties had insisted on using the mainstream joint stock company system model in Europe and America as a sample to achieve modern enterprise system construction after state-owned enterprises went public. However, the current state of state-owned enterprises blindly looking at money has precisely falsified the relationship between enterprise going public and modern enterprise system. Moreover, in the Chinese securities market, utilizing the external governance function of the stock market to improve the governance of state-owned enterprises is simply seeking skin and skin from a tiger. On the one hand, the market value of central enterprises is very large, but shares outstanding are very small. Small and medium-sized shareholders not only do not enjoy the benefits of dividends, but also their supervision over enterprises is negligible. Secondly, the State-Owned Assets Supervision and Administration Commission, SASAC, finds it difficult to streamline the interface between state-owned enterprises and modern enterprise systems, and often plays a role in the specific operation of enterprises. However, state-owned enterprises rely solely on their political orders to attract money in the name of implementing national strategies, rather than strengthening the enterprise to be accountable to shareholders, which becomes a reasonable choice. In fact, As far as the State-Owned Assets Supervision and Administration Commission itself is concerned, its model has not truly addressed the institutional issues in state-owned asset management and state-owned enterprises. Many old problems can be seen from the reform of state-owned enterprises, which includes 2 steps to advance and 1 step to retreat. Many efforts at the micro level, such as performance assessment and talent management, cannot hide the weakness of SASF in the reform of the development direction. There has never been a big breakthrough in the reform of property rights. For enterprises, they are more concerned about how to organize, rather than how to expand, which clearly shows the mindset of overestimating the weight of capital, which has led to the heroic act of state-owned enterprises rushing into the stock market. The local state-owned assets supervision and administration commission, which belongs to the same system, naturally has a consistent approach. However, the stock market has already been crushed by central enterprises before the local state-owned assets are fully assembled, and the local state-owned assets commission has returned to the central state-owned assets. The old path of enterprise reform by the committee is clearly not feasible, and we have to face a new choice of future main direction of attack. In fact, in order to become a big and powerful enterprise, in addition to going public to attract money and increase capital, it is also worth considering the direction of market-oriented joint stock system transformation. Although many local governments are also taking the path of state-owned enterprise restructuring, it is common for the government to personally negotiate and coordinate, adopting the method of selling high-quality enterprises to foreign investors and less advanced enterprises to private investors. Good companies are internalized before being listed for trading, resulting in a significant lack of enthusiasm for private capital to participate in state-owned enterprise restructuring in various property rights trading markets. The state-owned asset restructuring cannot operate in a market-oriented manner, and it cannot achieve a synergistic effect with expanding and strengthening. In the future, as private enterprises take on a new level of scale and level, in terms of industry, talent, technology, with strong basic conditions in the market and the emergence of a group of large private enterprises, groups, with certain influence both domestically and internationally, private enterprises will have greater strength to participate in the restructuring of state-owned enterprises. In the situation where private enterprises reflect national characteristics in terms of enhancing national competitiveness, creating taxes, and stimulating employment, the country may also break the glass door dilemma of private enterprises participating in state-owned enterprise restructuring, establish a new interface with private enterprises, and form enterprise alliances at the equity operation level. As Yu Hangshan, secretary of the CPC Shanghai Municipal Committee, said, local state-owned enterprises may give up part of their equity to the private sector on the premise that the state controls core resources. In addition, the excess capital in society is expanding at a rate of almost zero every decade, and there is no need to forcefully squeeze it into the stock market for evaporation. Reasonable utilization of it in the restructuring of state-owned enterprises is also a feasible channel. Under the combined action of the above elements, local state-owned enterprises will absorb more social capital in the future to form hybrid shares. The emergence of a new phase for state-owned enterprises, with a capital structure of 1/3 of the world embedded in state-owned enterprises, will also become an expression for the return of private, foreign, and state-owned assets to Jin. State-owned enterprises themselves will become module suppliers and system designers, and the socialization characteristics of shares are becoming increasingly evident. As long as the country grasps a few key modules and holds significant decision-making and final discourse power, other modules can be placed on foreign enterprises or operated by private enterprises. This transformation process will last for several years. First of all, the local state-owned assets supervision and administration commission will change its thinking mode and implement fair treatment for private equity investment. In some places, such as Shanghai, this situation is changing. Recently, Bayan Group has restarted reforms and split up various industrial sectors to attract foreign and private investment. In fact, it has embarked on the journey of transforming a single state-owned asset into a diversified and mixed economy with a certain proportion of asset structure. Secondly, the maturity and availability of various types of capital. If private capital no longer recklessly follows the trend of speculation, but is willing to settle down and do long-term career. For example, new types of capital such as VC and pay are receiving attention from local governments. Guang's House strongly invites pay to participate in the 30 billion yuan state-owned enterprise restructuring project, but their investment scale currently lags far behind the demand for capital by Chinese enterprises. And there is still a large amount of them being trapped in the capital market. Their maturity and growth, as well as increasing awareness of state-owned assets, also have some differences. Process. From these perspectives, it is likely that the return of the Three Kingdoms to Jin will only take shape after a decade of social surplus capital growth and various institutional speculative opportunities, such as stock market, oil, coal, etc., are filled out. With various conditions in place, the restructuring of state-owned enterprises will eventually conform to new and unique development laws. In order to achieve a brand new stock, the power structure and management and operation situation may require different regions to adopt special restructuring methods based on their own conditions and the specific situation of enterprises in various industries. Some will be promoted by the local state-owned assets supervision and administration commission. Some will operate through stock exchanges and property rights exchanges. Some will be bundled with investment projects for sale, and some will be sold in packages. As long as it does not harm the national interests, the situation of state-owned enterprise restructuring with various tricks and diverse approaches will gradually open up. After the restructuring, the new state-owned enterprises that have returned to the stock market will gradually offset the haze brought by the old state-owned enterprises, effectively alleviate the confrontation between the state-owned sector and the market sector, weaken the stock market crisis, and further eliminate earthquake hazards. This may be the roadmap for post-disaster reconstruction of the stock market, and the concept of new state-owned enterprises may also provide a major investment theme for the next round of stock market recovery.